Hey everybody, how's it going? Happy Saturday. It's June 2nd, and this is day 2 of 30 on my Forex trading journey. Actually, I've been on the journey for several months, but I'm sharing my journey with you for 30 days with little brief daily videos. Hopefully they're interesting to you, get to know a little bit more about me, my life, what I've been up to. Thankful you're here and watching. So today's topic is, what is the Forex in the first place? Because I keep talking about Forex trading, but if you don't know what the Forex is in the first place, it can all be a little bit confusing. So what is the Forex? Forex is short for foreign exchange. Foreign exchange, Forex. So what is it? It's the largest financial market in the world. It's not the stock exchange. It's not any of these other financial markets. There's lots of different financial markets, but Forex is the largest financial market in the world. It's over 10 times more money traded on the Forex than there is traded on the stock exchange. So just to give you some idea, it's $5.3 trillion per day on average traded on the foreign exchange. So again, largest financial market in the world. Who trades on the Forex? So you have the big boys, so to speak, the big players, the huge banks and international banks and countries, governments trade on the Forex. And that's all that was allowed to trade on the Forex for a long time, was the big boys, right? The big players, the big financial movers and shakers in the world. You had to have at least $1 million to come trade on the foreign exchange. But thankfully, over the last few years, due to the power of the internet, the use of brokerages as middlemen, the power in numbers of small peoples gathered together through brokers and trading that way, the power of the foreign exchange has been made available to everyday people like you and me. So what is it exactly? What is the foreign exchange? What do we trade on there? How does it work? So the best way I can explain it is to talk to you about traveling, if you've ever traveled internationally. So as an example, I lived in Japan for 3 years, so we'll talk about Japanese yen. So let's say you were to visit Japan, though. You go, you get on a plane out of LAX International Airport. Let's say you fly over to Japan and you get off the plane with your US dollars in your pocket. You're not going to be able to buy anything, really. So you go to the little exchange office at the airport, or you go to a bank and you change your money. Say you had $500 US dollars in your pocket. You trade them in, they give you Japanese yen. Let's just say, I don't know the exchange rate right now or anything like that, but let's just say they give you 700 Japanese yen. You gave them 500 US dollars, they gave you 700 yen. But you're on vacation. Let's say you're staying with some friends and they're super generous, like the Japanese people are. I know from living there. They paid for everything, the whole trip. You didn't have to spend a dime. So you came with 500 US dollars, they gave you 700 yen, you kept that 700 yen in your pocket for the whole week, your vacation. Time to leave, you haven't spent a dime. You go to that same exchange office, you trade your yen in, your 700 yen, expecting to get your $500 back, the same thing you spent. But the exchange rate actually changed in your favor during the course of that week, and instead of getting $500 back, you get $600 back, and you're like, what? I didn't even do anything. I just held on to my yen for a week, and how did I make money off of that? That's crazy. Well, that, my friends, is the power of foreign exchange. The perceived values of currencies changes every day, every moment, day to day, moment to moment, hour to hour, week by week, month by month, year by year. And there's different factors that influence the perceived value of one currency versus another. So the US dollar versus the Japanese yen. So let's say during that week you were in Japan, there was a natural disaster like a tsunami hit a town, or a nuclear power plant disaster in Japan. And those kind of incidents take place. And from a world perspective, the value of the yen is in danger, so it goes down temporarily in comparison to the US dollar or to the euro or to the Great British Pound or whatever. So if the Japanese yen goes down, and then you get more dollars in exchange for your yen. That's what happened that week when you were on vacation and you came in with $500 and you left with $600 just because you timed it well. So natural disasters, things like that, can impact the value of a currency. President Trump might get on Twitter and say something dumb like, I'm gonna launched nuclear bombs at North Korea. In the eyes of the world, that endangers the value of the US dollar. So the US dollar might go pew when he says something like that. Or, let's say the leader of the European Union gets on and announces on the news, hey, unemployment is down in the European Union. There's way more people employed. We went from 5% unemployment down to 3% unemployment. So there's only 3% of people unemployed now versus 5% 3 months ago. That's good news for the European Union's economy. So the perceived value of the euro goes up versus another one. So you can see there's different things that will move the values of currency. There's, like I said, natural disasters, political, speeches or announcements, economic reasons. Or let's say, the U.S. decides it wants to buy a whole ton of something from Canada. They want to go buy a bunch of logs, lumber from Canada or something, right? And they're just going to get all their lumber from Canada right now. So they go up there with millions and billions of US dollars. They exchange it all for Canadian dollars because they want to purchase from a Canadian seller of lumber. So they just bought a whole bunch of Canadian dollars. So if the demand for Canadian dollars is perceived as being higher, then the value of the Canadian dollar is going to go up versus the US dollar. So that's another thing they commit. So economic, trade reasons, political reasons, natural disasters, all kinds of things can influence the perceived value of one currency versus another. So as those values move in comparison to one another, the markets move like that. And you can make money on the Forex by doing that. And so the Forex, like I said, is the largest financial market in the world. Banks and governments do it. It's perfectly a legitimate market. You've actually been trading on the Forex probably your whole life, whether you've known it or not, if you have a bank account. Why do I say that? Because if you have a bank account, I don't know if you've ever thought about it or not, but the banks don't just hold on to your money, keep it safe in a vault out of the kindness of their hearts or to do you some kind of favor. They actually do it because they take your money and they make money with it on the side, and then when they give you like a 1 or 2% interest per year on your account in exchange for making themselves millions, right? So that's what banks do. Actually, I've talked to bank-employed traders, and typically somewhere in the neighborhood of 50% of the average bank's assets is tied up in trading Forex. So banks trade real estate, they trade stocks and bonds and Forex and among other things, but Forex is by far the largest chunk of a bank's investments on average. So the thing is, this power that they've been using to benefit themselves with your money for all these years, and you didn't know about it, and you're just happy, hey, I had a safe place to keep my money, and I know I'm going to come back when I need it. My money's going to be sitting there. I don't have to stuff it in my mattress or hide it behind a picture frame in a wall safe or something. Somebody breaks in and steals it. I can keep it in the bank's vault. It's safe and secure, and they give me 1 or 2% per year for the favor of holding onto my money. But actually, they're making millions, making themselves rich, and taking care of themselves. But your money is actually benefiting them more than it's benefiting you. So through the power of Forex and this type of opportunity that I've been involved with, we now get to learn how to do what they've been doing all along and have our money now benefit us. So hopefully that gives you a little bit better idea of what the Forex is, how it works in general terms, and we'll move on from here, kind of piece by piece for 30 days. Hope you're going to be along for the journey and join me each day as we talk about little different aspects. Some of it's going to be concepts, like today, because on Saturdays and Sundays, the Forex market is closed. I'm not trading. I can't demonstrate really much trading to you or anything live because the markets are closed. So they run 24 hours a day, 5 days a week. On the weekends, you can trade cryptos, but I'm not doing that right now. I'm just trading typical fiat currencies, normal currencies. So I figured it would be good to talk concepts on the weekend since the market's closed. But we will, over the course of these 30 days, talk about practical stuff. You'll see, like, how much time do I spend doing it? What do I actually do? How complicated is it? Can you do it? All those kinds of things. So hopefully you'll join me for the journey. I appreciate you being here today if you were able to join me. I look forward to talking to you more. If you have any ideas of particular videos or subjects or topics that you want me to cover during these 30 days, feel free to drop them in the comments. And other than that, I'll talk to you soon. We'll see ya.